ASFIP Foundation promotes financial literacy in the Atlanta community where ASFIP members work. We want to help the individuals starting their careers too learn, grow, succeed. Our logo is made up of 4 corner pieces, which we like to think of as pieces of a frame. Our 4 principles help you frame your future. The principle of manage risk has 3 components for success: credit and debt, avoid fraud, and emergency fund. We will now review some of the steps in the area of credit and debt which you need as you pursue financial well-being. Hey, how's your credit score? Is it up there or down there? You need debt to start building your credit score, but it's a double-edged sword. A credit score is a 3-digit number assigned to a person that indicates to lenders their ability to repay a loan, and ranges from 300 to 850. Lenders use credit scores to determine who qualifies for a loan, at what interest rate, and at what amount. A good credit score can save you over $100,000 over your lifetime by allowing you to get lower interest rates on mortgages, auto, and student loans. Because a low score may keep you from getting loans or a credit card with low interest rates, you can find out exactly what your credit score is by contacting one of the popular credit rating services, such as TransUnion, Experian, or Equifax. A variety of factors contribute to your credit score: payment history, amount of debt, length of your credit history, new credit, and your credit mix. So, let's say your score is low. First, you're not alone. But second, there are steps you can take to improve your credit score. Here are some tips. Pay your loans on time every time. Always target loans with higher interest rate first. Paying a little more than the required payment is always a good idea to help balances go down faster. One way to make sure your payments are on time is to set up automatic payments or set up electronic reminders. If you've missed payments, get current and stay current. Don't get close to your credit limit. If you close some credit card accounts and put most of your credit card balances onto one card, it may hurt your credit score if this means that you are using a high percentage of your total credit limit. Experts advise keeping your use of credit at no more than 30% of your total credit limit. If you do use credit cards, paying off the balance each month will help you get better scores. Credit scores are based on experience over time. The more experience your credit report shows with paying your loans on time, the more information there is to determine whether you are a good credit recipient. Only apply for credit that you need. If you apply for a lot of credit over a short period of time, it may appear to lenders that your economic circumstances have changed for the worse, and this can negatively affect your credit score. If you have old credit card accounts you are not using, keep an eye on them to avoid fraud. A credit report is a report of an individual's credit history that provides details of what makes up a person's credit score. If you have tried to be proactive and you're still struggling with significant debt, consider contacting a debt relief service like a credit card counselor or a debt settlement agency that can advise you on managing your money and debts. Paying careful attention to the factors that impact your credit score will simplify your life and secure your financial well-being. Thanks to all our sponsors and volunteers for making this possible. View other videos in this series on YouTube. For helpful links and journey to financial literacy, follow us on Twitter and LinkedIn. For more information, go to asfip.org/manage risk.